It's Sunday, March 25th. I'm Tony Oz, and welcome to Stock Trader TV. I value your time, so let's get right to it and have a look at what the markets did last week. The first chart I'm looking at here is the NASDAQ, and we can see this rally that we had this last week taking place all the way breaking through these two horizontal pink lines that I have, which are identifying the two resistance levels that we had. The first one from the previous stops coming in about 24.5, and the top one, which comes from the highs that we had after the big crash day at about 24.31. We're able to pretty much penetrate over the 20-day moving average, which is the red line here, and then just straight up through the resistance levels. And the following 2 days, we had a little test of the 50-day moving average. We're able to close above it both days, which tells us that there is some strength in the market. So did the Bulls send a thank you note to Ben Bernanke? I certainly hope so, because he really made this market get some steam, and those poor short bears got squeezed really hard there. So now let's take a look at the Dow chart. And on the Dow, we have pretty much the same thing. We're able to break out above the previous highs. At the Dow, it was 12,350. That was the resistance level. We're able to penetrate through it and close about 50-day moving average. Let's look at the S&P. The S&P, same thing, broke out over the previous resistance levels here and rallied all the way up above its 50-day moving average. And it's a little bit, I mean, it's more significantly over the 50-day moving average versus the other two indexes. I also ran Fibonacci retracement lines here from the low at that we had on this day all the way to the high we had on the last day. And this will be our breakout point and also our 38% retracement back down. This is a 50%, and this will be a 62% retracement. So we can expect, if we do get a pullback to here, to be a good buying opportunity. Now, the important thing about this chart is that we can see that we have put two, and I repeat, two trend reversal patterns. The first one is this hammer, okay? This hammer is a reversal day, which is basically a successful test of these lows. And the reason it's a successful test is because we took out these lows, but we're able to close above them, okay? So that's a first trend reversal day from the candlestick patterns. The second one is this W pattern, or the double bottom pattern, which was confirmed when the top of the W right here was taken out. So these resistance level in the S&P case at about 1411 or so were taken out and probably will be supportive tested again. So if we translate it to numbers, I would like to be a buyer at about 1402 to 1411 on the first sign of strength, especially if we touch the 20-day moving average as it comes into play. All right, and on the first sign of strength, meaning I don't want to buy it as it falls down. Just say, oh, I'm going to buy it at 1411 and let it fall right through me. I mean, I'll buy it and fall through me, and I don't have a place to get out. What I want to see is I want to see it come to that level, and on the intraday chart, see it starting to turn up. So we have some sort of a low in that price range. As it starts turning up, I'm going to buy it. I'm going to place a stop loss right below those intraday lows. If I get stopped out, I'm going to go to the next low and do it again. Get stopped out, do it to the next low. Take minimal risk. Price target will be all the way up here, actually. You know, at 1440, 1435 to 1440 will be our conservative, actually, price target. And if we are aggressive, the highs will be. I would really like to see the market coming back down to these highs and testing them before we rally towards the previous highs that we made this year. If you're asking yourself, how can I be so bullish in this report? The answer is that I'm not so bullish or so bearish. I simply analyze the charts and draw my conclusion. The trend is your friend until it ends, right? And ends is the key word here. And if you combine that with high reward to risk ratios when entering trades and solid money management system, success would most likely follow. Now I would like to look at some of the previous stock picks we had, because many of you wanted to see what happens or to analyze trades that worked or didn't work. DRYS. This stock has pulled back from a 52-week high. Looks like it may be reversing to go back up. If you do like it, place a stop loss probably under 20 and 3/4 or 20.75. DRYS indeed reversed. This was the day we looked at it. It did not take out the 20 and 3/4, 20.75 stop that we recommended and made a new 52-week high. VRTX broke down on big volume. I wouldn't sell it short here, Jim. I'll wait for a rally, probably to about 29.50 or so. VRTX did indeed rally from that low. It didn't go high as 29.50 as I was hoping for. It started coming down before that. So now if it rallies back up to 29.50, it's too late to sell it short. Remember that, because then we're going to have lower lows and potentially higher highs, which means reversal of the trend. So we are going to take this trade off our watch list because we didn't get the immediate rally to 29.50. That's what I was looking for. Immediate rally, then sell short, then look for these lows to be tested. So this is one of these examples that we got just a partial rally, and now if we're going to get the price we wanted to sell short at originally, it's not going to work anymore. For you guys who like to bottom fish, MNST, you might have found short-term support at around 46 and change. 3 times it's holding that price level. If you like this stock, a stop loss below 46 will be good. The horizontal channel play on MNST indeed worked out. It did hold those $46 level and moved up to the top of the channel. So here's the bottom of the channel, middle of the channel, top of the channel. Would have worked out. Could have been a good profit-taking opportunity here. What I would do here is I would look for $53.50 to $54 to enter this trade. Put a stop loss below the pullback price that you enter. CERN indeed pulled back a little bit on the gap down on the following day after the breakout and rallied up over 56. We didn't get our entry point. We wanted 53.5 to 54. I said it may take a couple of days, couple months, couple weeks. We don't know. We still like it at that level. So this one we may want to keep on your watch list and look to buy it at those levels. My stock to look at this week is similar to CERN. It's actually ADTN. And again, it's a breakout play. We had big volume, up day. I want you to look, this is a 30-day chart here. If I look at a 200-day chart, you can see there's resistance level right here. There's overhead resistance over there. I expect that we may test this $27 level, but you know me, I don't want to buy it right here. I want to buy this stock when it, actually let's look back at that 30-day chart. I want to buy this stock when it pulls back right back to the $24 level. It may take a while. It may never happen. You know, it might continue strong, go through to the 27 right now. But if I buy it here, we don't have a good stop loss placement. If I buy it here, I have a good stop loss placement right underneath these lows with a low risk and high reward. So we're going to wait for the pullback on the straight like I normally do on the breakouts. And sometimes they come, sometimes they don't. Anyways, this will be my pick for the week. I want you guys to send me all feedback. Tell me what you think about this, how I can improve this. This is still in beta. And depending on your feedback, if this show is going to keep on going. I know I promised you guys something about the stock trading contest, $1 million stock trading contest, some advice. And I expect to have that completed for you by Wednesday or Thursday. And you're not going to want to miss that. And I'm probably going to enter the contest myself and do a step-by-step, day-by-day recap of what my moves were.
Before we conclude our program, enter your email address to receive our free real-time alerts. And remember, this is not financial news. It's Stock Trader TV. Now go make some money.